What if I told you that the world as we know it is about to come crashing down? What if I told you that one of the most influential institutions in the world is about to collapse, sending shockwaves through the global economy? What if I told you that Silicon Valley Bank, the very symbol of the innovation and power of the tech industry, is on the brink of failure? If you're feeling confused, scared, or uncertain, you're not alone. The collapse of Silicon Valley Bank has the potential to change everything we know about banking, finance, and technology. But is it really the end for all banks? Let's dive into the details and find out. Before we get started, if you're new to the channel, be sure to hit that subscribe button and turn on notifications so you can be the first to see our latest videos. The potential collapse of Silicon Valley Bank. For those of you who may not know, Silicon Valley Bank is a financial institution that provides banking services to startups, venture capitalists, and other tech companies. It's been a key player in the tech industry for decades, and its collapse would have significant implications for the entire sector. So, why is Silicon Valley Bank on the brink of failure? There are several factors that play here, but one of the biggest is the changing nature of the tech industry itself. As we've seen in recent years, there's been a shift away from traditional venture capital funding and towards alternative methods like crowdfunding and ICOs. This has left Silicon Valley Bank struggling to adapt and stay relevant in a rapidly changing landscape. But that's not the only problem facing the bank. It's also been hit hard by the pandemic, which has caused widespread economic disruption and uncertainty. As startups and tech companies struggle to stay afloat, many are defaulting on their loans and leaving Silicon Valley Bank with significant losses. So, what would happen if Silicon Valley Bank were to collapse? Well, it's hard to say for sure, but one thing is clear: the ripple effects would be felt throughout the entire global economy. As we've seen time and time again, when a major financial institution fails, it can trigger a chain reaction that spreads throughout the financial system. Investors panic, markets crash, and credit dries up. In short, it's not a pretty picture. But does this mean that the collapse of Silicon Valley Bank would be the end for all banks? Not necessarily. While it's true that the banking industry as a whole is facing significant challenges and disruption, it's also true that there are many other banks out there that are thriving and adapting to the changing landscape. In fact, some experts argue that the collapse of Silicon Valley Bank could actually be a good thing for the industry as a whole, as it would force other banks to innovate and evolve in order to fill the gap left by the fallen giant. Of course, all of this is speculation at this point. It's entirely possible that Silicon Valley Bank will be able to turn things around and avoid collapse altogether. But even if it does fail, it's important to remember that the banking industry is a complex and resilient ecosystem. While one bank may falter, others will step up to take its place. It may not be easy, and there may be bumps along the way, but ultimately, the industry will continue to evolve and adapt to the changing needs of its customers. Several years ago, a small community bank in the Midwest was struggling to stay afloat in the face of stiff competition from larger institutions. They knew they needed to do something to set themselves apart and attract new customers, but they weren't sure what. One day, the bank's CEO had an idea. He decided to focus on a niche market that had been overlooked by other banks, the local farming community. He recognized that farmers had unique financial needs and challenges that weren't being addressed by the big banks, and he saw an opportunity to fill that gap. So, the bank started offering specialized services tailored to the needs of farmers, like flexible repayment schedules and loans for equipment purchases. They also made a point of getting to know their customers personally and building relationships with them, which helped to build trust and loyalty. The strategy paid off. The bank quickly became known as the go-to institution for farmers in the area, and its customer base grew steadily. As a result, the bank was able to weather the financial crisis of 2008 and emerge stronger than ever. This story illustrates an important point, that even in the face of disruption and uncertainty, banks that are willing to innovate and adapt can succeed. While the collapse of Silicon Valley Bank would undoubtedly be a major blow to the tech industry, it wouldn't necessarily spell the end for all banks. There are still plenty of opportunities for banks to differentiate themselves and provide value to their customers in new and innovative ways. In conclusion, the potential collapse of Silicon Valley Bank is a serious issue that deserves our attention and concern. However, it's important to remember that the banking industry is a complex and resilient ecosystem that has weathered many storms over the years. While there will undoubtedly be challenges ahead, we believe that the industry will continue to evolve and adapt to meet the changing needs of its customers. So, let's stay informed, stay vigilant, and above all, stay optimistic about the future of banking. That's it, we've reached the end of the video. If you made it this far, you're one of the best people out there. Before you go, make sure to give us a like to let us know you enjoyed the video. And if you have any questions that pop into your head in the middle of the night, feel free to leave them in the comments below so we can answer them for you.